start recording. Okay, so now I'd like to introduce our speakers tonight, Nick Riccio and Suzanne Nguyen. Nick graduated from the Manchester campus in 2014 and earned his degree in sports management and graduated again in 2016. Nick and Suzanne collaborate on a variety of pieces during the home buying process, which they will talk about tonight. Specifically, Nick working as a loan officer and Suzanne as a real estate agent. We're so excited that both of you are here tonight to speak about the home buying process, what the market is looking like, and how to prepare yourself for buying your first place. So welcome, Nick and Suzanne. I'm going to turn it over to you. And Nick, if you want to start sharing, that would be awesome.
Awesome. Thank you so much. Let me try to share. Let me know if you guys can see my screen.
Looks good.
Okay, awesome. So I'll start with introducing myself, then Suzanne, if you want to take a few minutes and introduce yourself, that'd be great. So first and foremost, wanted to say thank you for having me. Really looking forward to talking through this, and hopefully everyone will be able to take something valuable from this. I think both Suzanne and I encourage questions. So if anyone has questions, feel free to either put them in the chat and we'll answer them as we go. So more often than not, if someone is, if one of you have a question, someone else is probably thinking it. So truthfully, we do welcome the questions. As far as myself, so I am a loan officer. I'm with Fairway Mortgage, and I live in Boston, Massachusetts. I work out of Danvers, Massachusetts, and just super brief on why I got into the industry, and sort of ties into why we're doing this, is when I was in a different career years ago when I first graduated from college, and when I went to buy my first home, I realized that it was a really daunting task, and there was not a ton of education that was available. There was a lot online, but trying to sift through it all and understand it was a challenge. And so I was always sort of really into real estate and like the personal finance piece. And I thought that it would be amazing to be able to help people and help educate people while they're going through this process, so they didn't have to feel how I did while I was going through it. So, so that's why I say, truthfully, ask any questions you have, and we're super happy to be here.
Absolutely. Thank you, Nick. So thank you guys for having us here. My name here is Suzanne Nguyen here from Access Real Estate. I'm an agent here over in the greater Boston area. So a little bit more about my background here. Graduated at LaSalle University in 2016 with a major in hospitality. So I've always done hospitality in hotels. Never really thought I would trickle into a field of real estate. So how I got into this business here was from my family here. Growing up, my parents always had investment properties. Through their experience, I've seen the wealth that you can continue to grow. And, you know, with that valuable knowledge that I've gained, I quickly transitioned shortly after. In 2020, I've done over about 10 million worth of real estate and continue to grow my team here. So we're going to dive into first-time homebuyers course here and offer you guys an education piece. Today, we're going to discuss a little bit more about the 2021 market and what we see. Who you hire in a team matters. Nick will dive into the loan process, and we'll dive into the buyer's process as well, and open up the floor for question and answers for you guys. So in regards to market overview, we're going to talk about the psychology of homeownership, briefly talk about the housing inventory and your purchasing power for the buyer standpoint. In regards to psychology of ownership here, in 2020, we've seen a lot of perspective of way people live. In regards to the pandemic here, a lot of buyers really appreciated the extra space and they trickled to the suburbs. In regards to the suburbs here, they value the extra space. Now, this year in 2021, the suburbs are still very popular, high demand. However, it is super competitive. We do see a lot more confidence going into the condo markets as well. With rates being so low and the world opening up again, I think there's a huge opportunity for condo inventory that a lot of first-time home buyers are trickling into. For housing inventory here, within the last 30 years, we've seen a huge, massive demand of purchases and refinances. The Housing Finance Agency extended the bill where rates will remain low. So with that being said, we've seen a thrive of and boom of refinancing purchases for 2021. Based off that data, we saw less credit card spending and travel restrictions led to improvements towards buyer saving rates. Purchasing powers here. We saw an increase with abundance of financing terms, loan programs, and limit increase alternatives, which really gives you guys a great opportunity in regards to your purchasing power, especially with the financing here. So good question here about why you guys should buy now. In regards to that, interest rates are at an all-time low, historical low. We've seen rates here anywhere, from the 3% to 4% is historically low. What we also see here is that you gain long-term investment growth, your equity built up, your value appreciation. We're seeing in Boston alone about a 13% year-over-year appreciation. What's great is that when you own investment here, you are also making debt pay down towards your loan here on your own ownership of the house. What's also great about being a home ownership is that you get the pride of home ownership. You see the stability and the security of a home. You feel as if you have a sense of community, a part of your neighborhood. You feel connected. You also have the freedom to customize your home as well, comparatively speaking to if you were to renting. If you were to rent in a home, you will have much more restrictions just because it's more so anything that you wanted to do, any alterations, you would have to go through third parties or your landlord to make those alterations here. Tax benefits, fortunately I'm not a CPA, but there are huge tax benefits here in regards to home ownership. Definitely take that into full advantage. And the beauty of the wealth building through real estate, and if you really plan and prepare what you can do with real estate, there's a lot of wealth building opportunities. So in regards to a real estate transaction, it's a very great opportunity to purchase a home. However, it can be also a very overwhelming process as well. So that's super important and very, very ideal and critical. Who you hire matters here. So buying a home is literally a team sport. Working with professional teams that you trust. It's all important. It's also important that the individual players have the ability to effectively communicate and execute on important decisions together. And we're going to dive into the parties of a transaction later on throughout the presentation here.
Awesome. So I'm going to talk about the first step when looking to start your home search, right? So you probably hear the first step should be getting a pre-approval. And I'm going to talk quickly about the two terms that we hear a lot of. So you'll hear pre-approval, and we also hear the term pre-qualification. So I always recommend when getting started to go through a full pre-approval process. And the main difference between the pre-approval and the pre-qualification is the pre-qualification is a type of option where you will you can enter your information online through a mortgage company, and it's all based off just the information that you put in, and they're going to give you an idea of what your budget might be based off of that information that you input. So the challenge with that is that we don't always put the most accurate information in, or we may not have it available when you enter it. On the flip side, the pre-approval is a very thorough process where a mortgage lender is going to ask you to complete a formal application and provide financial documentation. So they're going to vet through things like your bank statements, your credit report, your W-2s if you are an employee of a company, your tax returns, all of those things to make sure that you are in fact qualified. And even more than that, to make sure that there's a budget that can be determined that is appropriate for you. In this market, from a competitive standpoint, you know, putting the budget piece aside, if you are looking to purchase during this market, pre-approvals are basically like a prerequisite at this point. Throughout COVID, it was a requirement to even just be allowed to go into homes, because obviously they only wanted people that were considered qualified. But it's a differentiator if you are in the home buying process. If you go in with a pre-approval versus another buyer that isn't pre-approved, the seller and their team are going to take you a lot more serious because they know that you've already been vetted by a lender. So other than the budget, it's just a good thing to keep in mind that it can really help you from a competitive standpoint. Now, this creating the budget, if there's one thing you take away from this today, I can't stress enough that this is my number one. I can't tell you guys how often I have the conversation with people on a daily basis that the first thing I ask is, well, how much do you want to spend? And they don't have any idea. They say, as you know, as much as you can qualify me for. And the big thing with that is that a mortgage lender can always approve you for more than you probably should spend. And the reason for that is mortgage lenders are only required to look at your gross pay. So your gross pay compared to what your monthly debts are, and they create a formula and say, okay, well, you can afford X. The problem with that is that we all know that gross amount is not what we end up seeing in our paychecks, right? We don't take that home. So there's taxes, there's benefit deductions, you know, the list goes on and on, retirement. So when we are looking at it, again, we could pre-approve people and approve people for much more than they should be or would be comfortable with. So when you're looking to get started, my biggest piece of advice would be identify two things. One would be the monthly budget that you're comfortable with. So a monthly budget that not only you can make the payment, but also that you can continue the lifestyle that you want, right? I mean, the last thing that anyone wants is to feel tied to their home. So you want to make sure you can still do the things that you want. You can still set yourself up for retirement. And you really want to keep those things in mind, because again, when you do speak with a lender, they may tell you an amount that you can buy that may feel awesome, but at the end of the day, you want to try to go into it knowing what you should spend. The second piece to that is just the down payment. So I'm going to talk about loan programs and loan types in a minute, but you want to understand as well, like, how much money do you have saved? How much are you comfortable putting down as a down payment? Because there's a ton of flexibility, and you want to ultimately find out what works best for you. So that leads us to the next thing. So down payment. So this is usually the hot button, especially for first-time home buyers. So down payments, now there's a lot of programs, but generally speaking, the least amount of money that you could expect to have to put as a down payment is 3% of the purchase price. That is going to be the bare minimum. Now, there's programs that you can either get down payment assistance, or there are select programs that offer less than that. But generally speaking, you should expect to put at least 3% as a down payment. And I would say the average, at least what I see for first-time home buyers, is somewhere between like the 5 to 12% range, somewhere in there. I would say that's very, very common. Interest rates, another super hot topic everyone likes to talk about. My piece of advice on interest rates are, and something probably not a lot of people know, there's, at any given time when you're looking to purchase a home, there's about 15 different interest rates that you may qualify for. And what happens is they're all associated with different charges. And interest rates can become a tool to help people. So you can either purchase a lower interest rate, like if you want to make your monthly payment more comfortable for you, or you have that extra cash that you want to spend, there's an opportunity to pay what's called points, which lowers your interest rate. Now, on the flip side of that is I work with some people that keeping as much money in their pocket for closing is really important to them. So what they can do is you could take a slightly higher interest rate, and in exchange for that, the lender will give you credit. So when looking for your home and when talking to mortgage lenders, it's important to understand that the interest rate is really important, but you do want to find what's best for you, because it's not a sort of the one size fits all. And then term, I would say most common program is 30 years fixed rate mortgage. There are opportunities to go down all the way to 10 years. Obviously what that does is that makes the payment much higher because it's shortening the term. As you lengthen the term, the payment will become less because you're stretching it out. So the most common is definitely a 30-year mortgage. The components to the mortgage payment. So for when you buy a home, you have to make your one mortgage payment to the lender. And behind the scenes, there's quite a bit that happens. So the first piece is there's the principal pay down. So that's the amount that's actually paying down your mortgage balance on a monthly basis. Suzanne mentioned at the beginning where you're actually building equity because you're paying down the mortgage. The interest component is just the amount that you are paying for that bank or lender to lend you that money. So that component is paying them back. Taxes is another piece. So any city or town that you end up purchasing in, the city or town has a tax rate, and they're going to bill you for the assessed value of your property. Now that all goes into the one mortgage payment, but just know that that is another component to the mortgage payment. The insurance piece is a homeowner's insurance policy. So another thing, when you borrow from a bank, you always have to have a homeowner's insurance policy because at the end of the day, they really want to make sure they're protected. So you have to have a homeowner's insurance policy. It gets wrapped into your mortgage payment. So that's that's really the fourth component. And then lastly is the mortgage insurance component. Now, this is only charged if you purchase a home and put less than 20% down. Anytime you're going to put less than 20% down payment, the lender has to charge what's called mortgage insurance, which is really just another layer of protection for the lender because it's considered a riskier, it's a riskier situation since there's less than 20%. So at the end of the day, when you're buying your home, you're going to have that one mortgage payment, but it's important to know that there are all of those components that will be happening sort of behind the scenes.
Great. Now that you all have a better understanding of your financial criteria, the fun actually really begins. So now you'll be hitting the ground, actively searching for available homes in the market. So we're going to go ahead and dive deep into a brief overview of the house process, house buying process. So first we'll start up with the house hunt here after you get pre-approved. Now that you know what you qualify for, the fund looks for your home with all the many tasks, important timelines, documents, and responses. The conditions and paperwork here we're going to dive deep into the team that's involved here, and then we'll go ahead and get into the closing. So we'll go ahead and simplify the 9 steps of a home buying purchase here. So this here is a simplified steps here. So first, you're going to go ahead and connect with an agent. You will also then connect and get your pre-approval. You'll start your home search. In regards to a home search here, your agent, you want to work with a very expertise and knowledgeable agent that really knows your local market and really know how to structure a deal, and especially in a competitive market. That way that makes your offer stands out. Once you go ahead and go under contract after searching for homes here, another parties that you're going to be hiring throughout the process would be a home inspector. A home inspector here is not mandatory, but it is highly recommended, especially for first-time home buyers. A home inspector here will really dissect the property inside and out to give you that knowledge of the overall home functionality and utilities. And what's great about home inspection here is that you also have opportunities to take a look at the property and also renegotiate with the sellers to make those repairs or offer any sort of conditions as well to make the process much easier. After home inspection here, the lender will go ahead and process your loan application. Once they have your loan application in hand, they will send out an appraiser. What an appraiser is that they send a third party onto the property to determine the actual true value of the home. And that appraiser there will provide a report back to the bank to finalize your loan documents here. Once you have a finalized loan document, you will be clear to close, which leads to the closing day. So throughout this whole 9-step simplified process, it can take anywhere from 45 days to 60 days for a total buyer's timeline here. Thank you guys so much for joining with us here today. We would like to open the floors here for any questions and answers, the Q&A.
I have a question for you guys. I'm curious about the, right, like you talk about all like this team that you need. Like how does one try and find these folks to like get a team together? Talk me through like that process and how, what would be like the first step to finding that team?
Yeah, so I would say probably the simplest way or the most common way, well, in today's world is usually either we know someone, so like friend or family may have used someone that they like and trust, or using online. I mean, a lot of times people will find someone either on social media or just through like a Google search. And what happens is, more often than not, if you find someone you like and trust, so say first you find the realtor that you like and trust, they're going to have that team that they like and trust. So usually they'll help make that process a little easier. Same thing if you end up working with your lender first, you know, typically they have a team that they already know, like, and trust, and they'll make introductions. I would say that, you know, that's usually the best way.
Cool, thanks.
Who's going to be brave?
I have a quick question. So you talk about putting like less than 20% down typically. If you are able to put the 20% down, does that affect your first time home buyer like interest rates or any programs that you could qualify for or not?
Yeah, no, that's a really good question. So no, there's absolutely nothing, there's nothing bad, you know, about putting 20% down or more. I bring that up because being, you know, a first-time home buyer, sometimes folks just don't have that level of savings yet. And so with the way the housing market has increased so much in almost all markets around the country, lenders had to find ways to make it more feasible for more people to become homeowners, which is why the less than 20% are so common. But it wouldn't, typically, as far as interest rates go, it actually helps a little bit. So the more you put down, typically you get a little bit better interest rate. So no, there's definitely no negative. The only thing I typically have the conversation with people about is that even if you have the 20 or 25% saved, you know, it's worth thinking about, you know, what could you do with that money elsewhere? Like, would it be better going towards into your retirement or into anything like that where it could grow, as opposed to tying it up in your home purchase? So there's absolutely no right or wrong answer, but it's good just to sort of evaluate what's best for you.
Thank you.
Sure.
We have a couple questions in the chat. The first one that came through is, what should you look for in a realtor?
Yeah, good question. So there's definitely a lot of realtors here in the industry, which makes it very super competitive. What really dictates a really good realtor here is the knowledge and expertise in the local market here. You really want an agent that really knows the local area, as well as structuring deals and sourcing deals. Like I said here, the inventory in Boston here, or even in New Hampshire, is a very shortage inventory. So you really want to find that agent that has complete access to on and off market properties to make it super competitive for you here. A typical property will have about, you know, in this current market, anywhere from 5 to 20 offers. So you really want to have an agent that can make your offer stand out.
Awesome. Another question that came through, is the very first step in the process getting pre-approved, then finding a realtor, or is it the other way around?
So I think there's no right answer. Either one works. We see it, you know, every which way. So definitely no right or wrong answer. I would say more often than not, if you find your agent first, that's totally fine. But probably the first thing they're going to recommend is now, okay, let's get you pre-approved. So then we can really drill down on your home search.
Certainly, for sure. It's super important to understand and connect with the lender, as Nick was mentioning here, to really dissect your budget and run down your financials, and then start getting the house search.
Awesome. Another question around what are the differences between MIP and PMI? That's a tongue twister.
Yeah, there's a ton of acronyms. So that's a little bit semantics. It's mortgage insurance premium. Not to get too technical, but that usually is referenced to one specific loan program. Mortgage insurance is the most common. They're really the same thing. Just another reason to make things a little bit more confusing. But at the end of the day, it's really kind of this similar thing.
Okay, another one. The 45 to 60 day time frame that you mentioned, is that the time from clear to close, or is that from inspection to closing?
That's a great question. Yeah, so that 45 to 60 days is just an average. It can definitely be expedited depending on how you structure the deal. But typically that 45 to 60 days timeline is from once your offer gets accepted to closing.
Yeah, and just to add to that, to Suzanne's point, it's typically the situation, like every situation is super different. Sometimes they may say, like, you need to get this done immediately, and in mortgage world, immediately is like 30 days. Sometimes the seller, especially we're seeing now a lot, where the seller, since it's such a seller's market, they may say, we want to stay in the house for a long time. So It can be much longer than that. So it's usually dictated by the actual situation with that house.
Awesome. If you start working with a realtor and it's just not jiving, how do you quote unquote break up with them?
Oh, that's a difficult question. I know breakups are not always the easiest, but I think, you know, if it's not working, you would really being transparent with your agent and communicative in figuring out why it's not working. I think in regards to a huge milestone purchase here, it's super important that you guys set boundaries throughout the process, and more so talk about goals and how you guys can collectively achieve this goal together. And if it doesn't work out, it's just all about being transparent. Ideally, you want to make sure that, you know, you're not legally binded in any way possible, but just transparency is key for sure. But we do see a lot of that in the business here, which is very normal. But like I said, it's very ethical just to be communicative with your agent upfront.
Fantastic. How long does a pre-approval last for? This person mentions that they know a couple people that have been looking for over a year. Is there like a certain time frame that you would need to get pre-approved after it expires or something?
Yeah, no, that's a good question. So typically pre-approvals are like honored for 60 days. And basically that's just because that's how long mortgage companies allow financial documents to last. If say you got pre-approved and you don't end up finding a home for 8-10 months, really the only thing you would be doing is updating like pay stubs or new bank statements. It's not like you have to reapply or anything like that, but your lender just would say, hey, it's been 3 or 4 months. If nothing's changed on your end, just give us updated pay stubs, bank statements, and that would be the sort of refresh on it.
A lot of offers in today's market are going in as is without an inspection, which totally sucks. Aside from that not being, that was my little, like, that's my 2 cents. This person didn't type that, but that's my 2 cents. It's a fact, aside from the fact that it's not safe as a first-time home buyer, is it required to, are you required to have an inspection? And how much harder does this make as a first-time home buyer to, to be in this field where there's a lot of people just skipping this piece, but knowing that a first-time home buyer may be required by the loan terms to get this done?
Yeah, absolutely. I completely agree. It's a very, it's a difficult market for sure, especially with such many competitive offers that are waiving that inspection contingency. What I usually do here and consult first-time home buyers here is really understanding and assessing. When you're walking through the property, you really want to have that good knowledgeable agent that knows and have experience with the property, going in and out of the property here, that can really help you assess the risk of the property. So that way you can digest what you can really take on and what you can't take on. In regards to waiving inspection for first-time home buyer, I think that's very, it makes your offer stands out as a very strong offer. However, I always recommend doing inspections regardless. If you do plan on waiving it, that's completely fine, but I do recommend, offering inspection for informational purposes only in an offer. That way you still have an understanding of the overall property inside and out and the functionality. With that competitive, I think, with the market here, it has been a little bit unhealthy, but I do see that it will come back where it's going to be completely normal to have the inspection contingency. Like I said, it's just more so having the right team alongside with you to assess the risk.
Great, thanks. How long does the home search step usually take?
Yeah, that's a great question. Every buyer will be completely different. I think it really, it comes down to the buyer and what they're looking for, and if it fits their goals. You know, I've worked with buyers that find home sight unseen. I've know buyers that been searching for months or even years. So it's really, there's no really right or wrong of how long. It's just more so fitting to your goals and your future, and if it aligns your vision here.
Great. This one's specific around what do first-time homebuyer programs offer? I've heard of grants, down payment assistance, etc., but I never know where to start or what they really offer.
Yeah. So generally speaking, the first-time homebuyer component is that 3%, typically letting you know, people who it's not their first time can't put 3%. If it's your first time, you can put 3%. As far as there are plenty of programs for down payment assistance, typically how that works is they're usually state-run programs. So I know, at least I'll speak for Massachusetts, we do have a down payment assistance program for first-time homebuyers where they can take advantage of $15,000 down payment assistance. I know New Hampshire has a really similar program. New Hampshire's might actually be 20 or 25,000, but typically it's very state specific. So depending on what state you're in, you know, it's worth having a conversation when the time comes for you to ask about it with a loan officer, and they'll certainly know what's applicable in your state.
Does the mortgage insurance component of the mortgage payment stop once 20% has been paid towards the principal?
Yes. So as long as it's a conventional mortgage, now there's another program that is commonly used. That's called an FHA mortgage. That program, it doesn't automatically fall off, but as long as you're in a conventional mortgage, once you get to 20%, it automatically falls off.
Okay. This person says, I've been told that we need to shop around for mortgage lenders. Let's say I want to talk with 3 lenders. Are all 3 doing hard inquiries on our credit? How does that work? Definitely don't want to hurt the credit score unknowingly after working on it for over a year. Help me understand, please.
Yes. So yeah, I would say it's good to talk. You know, that's always like a rule of thumb thing. I would say talk with people until you feel like you really connect with them. You feel like they're educating you, and there's value there. For the most part, most lenders are going to be really comparable from like a rate and fee standpoint. So I always say it's really important to jive with the person and feel like they're helping you. But as far as the inquiry goes, the credit bureaus do allow for that exact thing. So as long as you are doing this within a fixed time period, I would double check it. I think it's 30 days. And if you do it all within 30 days, it would only be treated as one inquiry.
I don't want to hack the house all day. Too hot.
Just want a friendly reminder that if you aren't speaking, just to mute your microphone, just because there's some background noise happening right now. Thank you. Does anybody else have any other questions? It feels like we've, covered a lot, but definitely we still have some time if there's any other questions that folks are still having. Question just came in. Key things to look for in a house that people may forget.
Yeah, I mean, there's a lot of aspects in a house. I mean, the little details is what a lot of people miss, you know, such as, you know, the functionality of the house. People really don't know really how to dissect the utility system. They see it, if it works, but it's really important to know, you know, the history of it, the age of it. Little details like that is really important. That way, you know, because you're going to be purchasing a home, and this home here is going to be, you know, you're going to be mortgaging it for, you know, say about 30 years. So you really want to know the age, the history of that, little details of, you know, what the responsibility of homeownership is. And I think that's super important in digesting all that as well.
How long before buying should you get pre-approved?
So that's a good question. I would say the biggest piece to that is like, so you understand your budget. The other component to it is like the whole credit, you know, credit pull. And I get it. People don't want their credit pulled all the time. So, you know, try to find the balance of, you know, when you can really, like, when you're at least feeling like you're serious about it, and then try to figure out your budget. But obviously being mindful of, you don't want your credit pulled all the time. So I would do it once you at least are committed to the fact that you, like, now is a good time for you. And then I would look to do that.
Are there any unexpected costs that people might not realize or know, both required and recommended?
Great question. Yeah, I mean, in regards to a purchase here, Nick will talk about more so of, you know, closing costs here, and he'll dive into that. But in regards to closing costs, anything that I can, you know, think of here is that out-of-pocket expense for buyers would be, you know, a home inspector. You'll pay for a home inspector appraisal, and that's all pretty much included during the home buying process cost as well. Nick, do you want to dive into the closing costs?
Yeah, and sorry, I actually missed the question. Was it just what are the fees, or?
Yeah, so any unexpected costs that people may not realize or know that could be required as a part of the process or recommended.
Okay. I mean, I think Suzanne, I think the ones you mentioned are the big ones, and sometimes the ones you pay upfront out of pocket. From a closing cost standpoint, you know, you're going to have your lender fees. So whichever lender you're talking with, you know, they're going to have their sort of administrative fees. But there's also like a lot of third-party fees. So you're going to pay for an appraisal, you're going to pay for an attorney, title insurance, a survey for the property. So things do start to add up. But that's usually all, you know, the actual closing cost component is done when you close. And way before you get to that point, your lender is going to let you know what those fees are.
There's no other questions in the chat. Oh, one just came through. It's the same, just kidding. I have a question in terms of finding a lender. Can you talk through, like, I don't know, some pros and cons of like getting a bigger lender or like a smaller local lender or a bank, and like what people should think about in terms of, you know, what each of those can offer, and some that like can also just offer the same things?
Yeah, that's an awesome question, actually. So there's a few different types of lenders. So the first and most common that we think of are banks, right? So your local banks in your town or city. Those, they can be really good. I would say the pros are, there's usually, you know, if you're a member there may be certain member benefits or things like that. The cons would be usually they're a little more restrictive for lending guidelines, and a little typically a little slower, just because banks just tend to operate that way a little bit. But I think there's there's tons of value in the local bank because they also have I kind of contradict myself, but they sometimes have a little more freedom, or they can be a little more restrictive. It can be hit or miss. Then there's what's called correspondent lenders, which is like my company, Fairway. Some other examples are you'll see like Guaranteed Rate, Loan Depot. Those are just mortgage lenders. I would say the pros to those are like that's all they do. Speed is usually a big thing with them. And then like the availability of your contact. Usually in a bank, they're going to work more bank hours. You know, a lender like I'm talking about now, usually more available nights, weekends, that type of stuff. Hopefully that was helpful.
I'm just curious as I start thinking about selling this house and buying the next house and trying to do it all over again. Another question came through. Do you know how we can find first-time buyer programs in your home state and city?
Yeah, the simplest way without even talking to someone, usually if you do like a Google search of like your state's home buyer programs, most states have like a home buying website. Like Massachusetts has a Mass Housing. I think New Hampshire has like a New Hampshire Housing. So usually if you Google something like that, you'll find the link for your state that way.
Credit union versus major banks. Any differences?
I would say, again, back to the first thing is there may be like member benefits if you join and you're a member. You know, there may be some sort of cross benefits from different products that they offer. Credit unions are usually I think are really good. They really tend to value relationships. So because they are smaller. So typically if you do bank with them and do, you know, auto loans and all that, usually they will be more incentivized if there's an existing relationship.
Awesome. Any other questions for our presenters? These have been great questions. I love how engaged everyone has been. It's been really fantastic. Maybe if you guys want to just like give a nugget of like what people should think about, or I don't know, like the next step for them. Obviously budget is a huge piece of it, but maybe something that like you wish you had known, or anything that you could think of.
You can go, Suzanne.
Yeah, I mean, it's a huge process here. Like I mentioned, it's really important to really understand your financials, and then getting down to your goals, you know, working out your timeline, finding members for your team throughout the process is super important as well. And more so lining the ducks in a row, because once you're in the process, you're really in and it's just gonna fly. And it can be a very overwhelming process, but so as long as you're prepared, it will be a seamless, streamlined process, 100%.
And I would add, I think the biggest thing is like do what you're comfortable with. I say this every day, all day, but you want to focus on like what you're comfortable with. The market might say you need to waive inspection or you need to pay X amount over to get a property, but if you're not comfortable with that, like stick to your guns and maybe you wait and you continue to rent or whatever you're doing, but you don't want to feel like you're pressured into doing something that either you're not fully ready for or just isn't the right decision for you or your family. So don't let the market like dictate what you do. Try to stick to what's right for you.
Awesome. And there was one more question. I just want to make sure we answer this before we wrap up. Any other tips for looking for buying a house, looking for / buying a house in another state that you don't necessarily live in?
Great question. That more sounds like an investment question. If you're not living in the house there out of state, it's more so like Nick would say here is if you're comfortable with it, by all means, definitely go for it. If it fits in your budget, it fits in your financials, fits in your investment goals. There are definitely, investors that do invest in and out of state as well.
Another question came in too. What if I'm looking to change jobs with about the same salary range, but also thinking of buying a home? Will this transition after my qualification?
Yeah, it's a good question. Rule of thumb is if you're staying like similar industry, similar pay structure, meaning like salary to salary, those types of things won't impact it at all. If you're going from, being a W-2 employee to self-employed, that would pose challenges. But if it's just like a job change, there shouldn't be any challenges with that.
And what about looking to buy in another state and moving there?
Great question. Yeah, I would say there's no right or wrong. It's more so what you're comfortable with, and if it's your lifestyle, your needs, your finances, then by all means go for it. Definitely line your ducks before making the big move. Employment-wise, life-wise, and lender-wise, making sure you're comfortable getting a team out there that can fully support you throughout the whole entire transaction. That way you have an easy, seamless transition, especially out of state for sure.
Awesome. Well, if there's any other questions, feel free to put them in the chat. But just want to say thank you again to Nick and Suzanne for being here tonight, sharing your knowledge and answering all these amazing questions from our participants. Just want to mention, I coordinate a lot of different events as a part of our Young Alumni series, as a part of our Young Alumni in person right now is not happening, but obviously virtual is, which is great. And so if you have an area of expertise or you want to share, your knowledge in some way, shape, or form, we're always looking for folks to engage. So feel free to reach out. I just put my email in the chat. Obviously, Nick has his contact information on the slide in front of you. And so if you have questions for them and you want to engage with them, obviously you're not required to in any way, shape, or form, but it's always an option if you want to work with them directly. Awesome. Thank you all.
Thank you guys so much.
everybody.
Have a great night.
You too.